Elaine Kub is our marketing analyst this week. Markets were closed Monday for Memorial Day, but spent Tuesday making solid gains. The Dow Jones Industrial Average used the day to set a record high, and both old and new crop soybeans surged higher, with the July contract sitting comfortably for a day at least above $15 a bushel. Elaine joined us to dissect corn and soybean market movement on Thursday afternoon. For farmers who aren't finished yet, there's a lot of precipitation falling over Nebraska, Iowa, Illinois. Those three states are really in pretty good condition. How is weather overall impacting corn and soybean markets?
I would say even as late as last week, it wouldn't really even have been a concern, because I was not a believer that we would be losing any acres or that there would be any acres switching. But now that we're getting really close to June on the calendar, there's a pretty big chunk of Iowa that never got its corn planted. So as of last Sunday, it was 15% of Iowa's intended corn was not planted. Same story for southern Minnesota, which is also a very large corn producing region. So they're really in a situation now when you get into June that their crop insurance guarantees are going to start getting trimmed. So they really will be switching to soybeans. And I don't necessarily think that we've lost acres yet, but only this week would you get me to admit that there would actually be switching, because I just don't think that farmers do it that often. But I do think we are probably going to see that in 2013 in that central Corn Belt region.
So to push you harder only in that region?
Probably. I mean, I don't see that there has been, certainly the market has not been pushing for a switch to soybeans for anybody else who's been able to get corn planted on a reasonably normal schedule.
Old crop soybeans have been fairly strong. They spent some time above $15 on Tuesday. They made a really good run here. What's the argument, if you still have some left, between selling and holding old crop?
The argument for holding, I can't make an argument for holding them, particularly because we saw the basis, the local processors here in Nebraska or Iowa really start pushing that basis in a wild fashion last week, and then that seemed to taper off. So I feel like the big push for old crop soybeans was made last week, and obviously you look at that one day on the chart, it was very wild, and it hasn't gone back to test those old highs back above $15 again. So I think the argument for holding on to them is pretty hard to make. I mean, obviously I'm not wildly bearish on them either, because the reason they are so high is because the processors are making money. These are great crushing margins for soybeans. But I don't have a lot of arguments for holding on to them at this point.
How do you feel about corn? If you can get above $7 on a cash basis, if the basis is strong enough in your area, is that something you would go for, old crop?
Yeah, I don't have a whole lot of arguments for holding on to old crop corn either. I'm a little more bullish on that just because we're certainly going to have to get through several more months, and it will take, there's not going to be an early harvest this year coming in to relieve the tightness of supply from the 2012 crop. So we've got all through summer and early fall that the corn processors, the ethanol plants, are really going to be needing corn and be pushing for it. So if you've got it at home and you think that you can keep it in condition, that's one thing. If you don't want to pay storage fees at a commercial elevator, that's, these are all things that you have to consider, but I would not discourage someone from selling old crop corn today.
I was reading your article on DTN. You were talking about the positions that traders are in, or the positions that they're getting themselves in. What does that tell us about how bullish or bearish they are overall on average?
Well, the really interesting thing, so for all through the winter, the past several months, the really popular thing for speculators to do and for funds to do was to be long the old crop of corn and short the new crop of corn, because it made a lot of sense. There was a shortage of supply in 2012. We're going to have a huge crop in 2013. And depending on where you got in on that spread trade, they made a lot of money. But now they have to unwind it, and we've certainly seen the volume of trade and the unwinding going on out of the May contract and now out of the July contract, but they've still been holding on to these short positions in the new crop of corn and soybeans. So the speculators and the funds are net short, so they have bearish positions on, but no real justification for it at this point. And now we've seen that this week. We saw that on Tuesday in particular. The markets really started to head up, because I think there was just a perfect storm, or just a fundamental straw that broke the camel's back of planting news, late planting, wet weather, that finally got just enough bullishness in the new crop markets that hit some buy stops, let's say, from the funds, and we saw explosive higher movement.
Would you be nervous to be long then?
No, if I was a speculator, I wouldn't be. If I was a farmer who doesn't have a lot of new crop grain sold, I think that there's potential for more days like that. I don't know. I mean, I think that the larger fundamental argument is that rain makes grain, and we're seeing the drought patterns recede, and there's probably going to be large crops. So it's hard to really be very bullish, but I think from the structural standpoint that these short positions are probably going to have to get taken out some point in time, we could see some higher movement.
I want to ask you a macro question here. Tuesday was a strong day overall. The Dow made a new high. Consumer confidence is up. Home prices are up. But there seems to be that overall nervousness about where the economy goes from here. How does that all play into grain markets or agricultural markets?
Well, it's not really great news for the grain markets or for commodity markets because we're seeing the dollar come up. It reached some new highs, 3-year highs this past week, and it's down quite a bit today. This is Thursday, and it's down quite a bit today. But overall, the dollar has been very strong, and it's very much tied to this economy, that we're the strongest economy in the world. You know, whether you can believe it or not, investors certainly feel that way, and they're coming into the dollar, and that pressures commodities. But the good news from a stronger economy is that you can expect to see the American consumer still able to pay for these higher gasoline prices, which sort of trickles back into the ethanol prices, which sort of trickles into the corn market. We are definitely seeing a robust demand for corn in the ethanol industry right now.